Welcome investors to Joe's Investment Express. Let's talk about the general market and the market ETF, specifically the QQQ, which tracks the NASDAQ, the SPY, which tracks the S&P 500, and the IWM, which tracks the Russell 2000. And I might be in the minority here, but I think that the near-term bottom is in. And I'm going to show you some evidence in the way of charts, individual stock charts, and then let's talk about the catalysts and historical precedences. Let's look at the charts, of course, and let me share some anecdotal evidence, and then we'll talk about whether we should buy into these things or not. But you probably are in them already if you have some sort of a retirement fund. So first, let me make the case that the bottom is in, and then we will talk about what's going to happen next. So the biggest indicator that the bottom is in is the individual stocks themselves. What we want to look for is a proliferation of stocks in bases, climbing up the right side of bases, breaking out, and or in uptrends. So let me show you my watch list here. I'm going to roll through this really quickly. Let's just see what we see. So hold on, I got to make this smaller. Uptrend, 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 base, Costco, I'm watching Costco, uptrend, Apple, watching Apple, uptrend, uptrend in a base, base, uptrend, 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 uptrend. This is getting monotonous, isn't it? Base, 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 uptrend, 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 uptrend. That was 25 charts. Let me show you these next 25 and I won't even say anything. We're almost through them. But what you're seeing is uptrends and bases. Now let me tell you, a few weeks ago, this was not the case. I was scouring the lists of 5,000 charts trying to find a handful that were in uptrends or breaking out. So that tells me that the individual stocks behind the indexes are really starting to perform. And it's just those big, heavy laggards like Amazon that are weighted so strongly that are still tugging these indexes down. Okay, so that's piece of evidence number one. Oh, before I begin, I guess I did begin already, but let me interrupt myself. Remember, this is not financial advice. This is just for entertainment and education. I'm not a financial advisor. You need to make your own investment decisions. I have been watching charts now for about 25 years, since 1996. So, the average bear market is 6 to 12 months long. These charts began to roll over on November 22nd. Here's November 22nd. This is the QQQ, by the way, which tracks the NASDAQ. So we are 6 months in to this correction. We are at the short end of the bear market. And if you think about it, in my opinion, all the bad news is in, right? We know about the raging inflation. We know about the war. We know about interest rates going up aggressively. So unless we get another leg of bad news in the form of maybe the war expanding, which we all hope is not the case, unless we get some bad news, I think the market is getting close to discounting all of this in. The market is a forward-looking instrument, and it looks ahead 6 to 12 months. I think most of this now is priced in. And now we are just waiting for a little tiny piece of good news. News about shrinking inflation, news about the war de-escalating, the Fed saying something dovish, or what seems most likely is just an exhaustion of sellers. Mutual funds have money pouring in every day. They are in tremendous pressure to invest. They were hiding their money in defensive plays, and they've pretty much taken their money out of even those, and they're just sitting on the sidelines for the most part. But one of these mornings, they're going to wake up and say it's time, and they're going to start pouring their money in. And I think that time is now, honestly, upon us. So here's the QQQ. Now, obviously, this is an ugly chart. down 30%. And keep in mind, the average high growth stock will 2 to 3x that. So many of them are down 60 to 90%, but you already know that, right? But if you look very carefully here, the last couple weeks, we see huge sell volume, which is capitulation, we could say, we can hope. And then we notice that it's really starting to tighten up. You have a close here, close here, close here, close here, close here, close here. We finally are getting some tightening. And that is obviously the first step. Now we still are in a strong downtrend here, but because of the things I just said and showed, I think, and I obviously could be wrong, but I think the bottom is in here. I think we're going to come back up now and see a pretty strong rally. We're way oversold. We'll rally, and then it'll probably retest and backfill, so to speak. So it'll probably come up to 305 or 315, 320, and then come back down and retest. That's kind of what we saw here, right? We saw an extended crash, and then a sharp rally, and then a retest, which tried to take off and failed. We're probably going to see the same thing, only hopefully it pushes through and starts building up the right side of the base. Now here's the QQQ again. This is the 25-year chart. Now you can buy and sell this thing just like a stock. You just type in QQQ, and in the advantage to the QQQ and the SPY and the other one, IWM, is they aren't prone to these huge moves. You're not going to see usually more than, usually a 1 to 2% move or a 0.5% move, occasionally a 4% move. If they do a 7% move, then literally the circuit breakers will go off and it'll shut down. So this thing is not going to gap down on you 40% like Snap or something. So getting back to the 25-year chart, here's this latest bear market. It has been a doozy. Here's the COVID crash. This was kind of an anomaly, and this was a sharp V bottom. But if you look, this crash in mid-2018 was also a pretty sharp V bottom. So we certainly could see a V bottom to end this bear market. But maybe we see some chop. See how in 2016 we had a solid year and a half of chop. 2008, it crashed, rallied, retested, and backfilled, and we were in for a lot of volatility. So we might be in for a lot of volatility here. And this is the mother of them all, the .com crash. You notice these very sharp snapback rallies, and here when it finished in 2002, it came down, undercut, V bottom, and then came back and retested. So this is probably what we're going to see, something like this right here, and then we'll start moving up again. Let's see. Let's look at the SPY. Now this is a classic head and shoulders top with the neckline, short on the neckline, but you would have gotten stopped out because it did one extra shoulder here, didn't it? The S&P 500 is down 20, what is that, 25%. Sorry, I had to move my little measuring tool there. And again, we see some congestion forming. This is kind of making a ledge. Now, if you watched my video on shorting ledges, you know that ledges often break to the downside, but not always. A ledge is a sign of stability, and it certainly can move to the upside. Because of the proliferation of stocks moving up, I think it is going to break to the upside. So if the SPY moves to the upside now, an obvious point of resistance would be 410. Otherwise, you have this neckline about 430, and then it probably will backfill and retest. Okay, so two things I want to say to wrap this video up. One, be sure to like and or subscribe if you got something out of this video. And two, if you want to steal a chart off of that watch list that I just showed you, this is maybe the best looking setup that I have on the list. MCK Mickelson, they are supplier for healthcare companies, medical equipment supplier. And as you can see, here's stage 1, just a really nice, well-defined stage 2 uptrend. And now you have, this is really the first real base since it broke out into this stage 2. And usually the first base results in a new uptrend to the upside. We did see a squat here, but the base was much too short. And now it's setting up really nice. Look at this buy volume. Relative strength is 97. I definitely will be buying this tomorrow and or the next few days. Ideally, I'd love to see it tighten up and do an inside day or two here and make a little handle and then explode out of the gates on high volume. That'll be our signal. But if it just goes tomorrow, I will definitely buy it. And we will hope we don't see a squat like this again. Then an easy stop would be to just put it under, this is the 50-day exponential moving average. What do you think about my speculations on the market? Could the bottom possibly be in? Let me know your thoughts. Maybe I'm way off base. I don't know, guys. You tell me. All right. Well, good luck in the trading week. Take care.